It's May 1st, and some investors are worried that the stock market has gotten a little ahead of itself with the three major indexes near record highs. So what should your playbook be for the month of May? Let's bring in Jeff Tomasulo, CEO and head portfolio manager at Vespula Capital. And Jeff, should investors abide by the saying, sell in May and stay away?
Well, maybe this time, but last year you would have got burnt, right? We had a great up the last 6 months of the year last year, so I think that would definitely have not worked. But I am very cautious right now, and you know why is because since 2009 we are up tremendously. And there's obviously a lot of manipulation going on because of the federal governments around the world are pumping money into the system. But when you have a move that we've had from the bottom, you have to be cautious. So some of the things that we're doing is we're moving into buying some volatility. What does that mean? Well, I'm looking at the VIX, and there's a product out there which is a VIX futures. I'm trying to hedge my portfolio because the VIX has been at all-time lows or below its mean over the last 2 years. So what we're doing is buying that to protect our portfolios, and then we're also looking at some of the positions that we've had in different sectors like technology, like biotech, and we're cutting that back. Basically, we're taking our profits off, and then we're looking to move our money into different areas.
Well, look, I mean, the S&P 500 is up over 200% since its March 2009 low. I mean, what's your take on valuations? Do you think we're heading for a correction?
Well, I think in certain sectors we're overvalued, and in other sectors we're fairly valued. Excuse me. But we definitely have to be on edge about a correction because you have so many things in the world going on. You have Greece, right? That's going on. If that moves out, if they move out of the euro, that could have pressure on the markets. You have major volatility going on in the bond market. We have the bonds yields are at all-time lows.
And what does that tell you, volatility in bonds?
Well, when you see volatility in bonds, that means people are afraid a little bit, right? They don't know what's going on. And then that takes us back to the Fed, right? We're all waiting for these interest rates to go up. Everybody's been talking about it. People have lost millions of dollars trying to anticipate this move. But the Fed they're so cautious because they don't want to destroy this unbelievable market run that we've had because people, and you see it today, people feel a little wealthier, right? Because their stock portfolios have gone up, right? So consumer confidence is at 8-year highs right now. So people are feeling, very, I guess, excited, but that's when you need to be cautious.
So what's the bottom line? What should investors be doing in terms of sectors, in terms of the direction of their portfolios for the coming months?
Well, if I was one, I would actually be checking my portfolio. You should always be checking your portfolio every month. I'm obviously more active, I'm in here, but anybody that is a retail investor, every month, I'd be very cautious if I'm long bonds. I don't want to be long bonds right now because I definitely see higher interest rates in the future. And then I want to see where I have exposure. Like if I do have biotech, do I have technology, some of these other sectors, and then where do I go? I'd be looking at media companies. We just had the the breakup of Time Warner and Comcast. That deal is off the table. So I'd be looking at CBS. I think that's going to be, is going to be a proponent of that. That should go higher. Other stocks that I'd be looking at, I'd be like investing in the U.S. dollar. That's something where, again, this monetary policy that's going around in the world, the U.S. dollar is going to be benefited.
And you think this dollar still has more room for growth?
Absolutely, especially on these pullbacks. We just had a massive pullback in the last 2 days on the dollar. But I think because of these central banks around the world, especially in Europe and Japan, that's going to be putting pressure on their currencies, which in return is the U.S. dollar is going to go up.
All right, Jeff, thanks very much for coming in.
Thank you, Scott. Thank you for having me.
I'm Scott Gam, and you're watching The Street.